you're unmuted now, Matt. Welcome back to F.A.C.E. How are you, buddy?
Oh, all right. Looking at Bitcoin and things this morning, and pretty rough out there.
Yeah, nowhere to hide, even the bonds yesterday. So, Steve, if you could stop sharing your screen, we'll let Matt do it.
There you go.
Thank you very much. All right, Matt, have you been here since we moved to Zoom? There's a little green box on your drop-down menu that says share.
Yeah, it's got kind of a tab here, share, screen.
There we go. It's coming
Okay,
up.
so I ended up, so you can see this, right?
Yeah, got
Okay.
your Twitter, got all your charts, everything up here.
So I ended up changing my presentation like 3 times, and even since I messaged you.
Okay.
So
it's a trader's prerogative, not just a woman's prerogative
yeah, I guess
change their
so.
mind. All right, go ahead.
Everything's been so crazy. Yeah, so it's early AM Pacific here, and Bitcoin was a lot higher when I went to bed, and I'm just kind of scratching the dust out of my eyes and picking my jaw up off the ground here. So just give me a second.
Okay.
So the general thesis for this interview was that I think, I don't want to, not an I called it or I told you so moment, but that through some interesting patterns, I had been talking about this for the last little while. Never could I have assumed a virus was going to be what did us in for the market. But let's take a look.
Do you think
anyway.
the virus, the virus did us in, or the virus is exposing fractures and weaknesses and the downside of financial engineering?
Yeah, I mean, at the end of the day, if everything's closing and businesses are going on hiatus, and that means,
true.
Balance sheets, revenue, yada, yada. So at the very least, it's just showing us a very, I would say, overreaction in a financial sense. I mean, from what we've seen out of China and how well South Korea has dealt with things, there's only been like 60 deaths there versus how things have gone in Italy. I would say that, there's a social need to overreact to a degree, right, in North America, to be cautious so things don't get out of hand in certain areas. But I think from the financial perspective, it's an overreaction. I don't think markets need to sell off this much because, it's not like we have 10, 20, 100,000 deaths already. And to try and price that in seems, I don't know, a little crazy. Anyway,
okay.
So, yeah, and with that said, with the way everything is panning out in North America and things are ramping up, when you look at it, sort of the numbers from Italy and things like that, we'll see how things really do go in the next 2 weeks in North America. I think people obviously don't need to be stocking up on toilet paper, probably be looking at, obviously your canned foods make sense, but people should probably be hitting the vitamin D and vitamin C a little hard to pump up their immune systems, because this was already one of the strongest flu seasons in recent memory. I remember being quite sick in the 2017-2018 season here, and you can see at the beginning of this year's flu season, it was already extremely high. So the North American hospital and medical system is already being pushed quite hard. So I think basically the goal here in North America is just to slow things so that hospitals are
not overwhelmed.
Yeah, exactly.
Yeah.
So
do you think you said, I think you wrote that you think that we're preventing spread with what we've done so far here in North America?
Well, or that seems to be what the plan going forward is it's just a slow spread, forward. Right? Yeah, because
don't you think we're a little late? And I mean, with the testing and everything.
Well, I mean, I think from a testing perspective, we're probably testing deaths, right? So I think because North America is isolated by oceans on either side, that like, because basically it's, oh, well, China was lying about the numbers. Okay, well, then South Korea got it. And, look at how they've been handling. So we're going to say, well, South Korea is lying, or these people are lying, America's lying. So, okay, let's just say everybody's lying about the numbers then, So, and even if that's the case, they aren't, we're not hearing about ICUs totally overrun in America for the last 3 months, right? That hasn't been the case. So it has been slower here. So anyway, seasonal flu, things were already pretty lit. Social distancing, right? I was saying here, for the people that are where things are still fairly normal in North America. I mean, picking up a job in a grocery store, stocking shelves, or a pharmacy could be a good thing for young people or traders that, my crypto people that might be listening. There's a lot of low cap traders, and these are jobs that are going to still keep going. So, to the non-high cap people out there, go get yourself a job stocking shelves, because you're still going to have a job no matter how bad this gets. My general thesis for the last while at the Bitcoin top was, if an economic event ever happened, I believe Bitcoin would sell off too, as other investors cover their losses. And I think it will bounce quite hard like gold did before. And I talked about that before. When stocks crash, everybody exits everything that's made them money as well too, because they're covering their losses. So I think that this happened too in the last crisis. And I think that Bitcoin is doing exactly what it should, which is that it's a risk-on asset. And I think that as things sort of start,
you never really bought into that it was a hedge against economic chaos and digital gold.
Open about that one, no.
Yeah.
It could be digital gold, but that doesn't mean, gold in the sense that of the digital assets, it's the gold standard and the bet, on a large time frame, the best store of value compared to, a lot of altcoins, but no, not the hedge kind of thing.
Okay.
So I've done a lot of stuff with, sunspots and other astrology stuff that I do. And so something I was looking at out of a cycle perspective was that I've been looking at like a 1987 style event for the past year or so, has what I've tweeted as what would be the most likely scenario as something to pop up at us. I don't really think that the 2008 type narrative fits where we are in the market or where the strength of businesses was before. Before the coronavirus and the market sell-off happened, you could argue, there's a lot of debt in the system, et cetera, but that, companies were still doing okay. There was still growth in the market. So once this sort of pans out a bit and a vaccine comes on the market, are we going to be looking at a strong bounce as well too?
Do you think that we'll have a vaccine? I mean, I've read things that this virus, coronas, are much more difficult to develop a vaccine because of how they mutate.
Right. I'm not a
I know.
Just so I can't say.
But you're just assuming we'll have one.
Yeah, I and from what I've seen from other countries, Israel, Thailand has had a really good success rate, kind of using a concoction of drugs right now. So I mean, other countries that push the envelope a little more are having results, doing things a little unconventionally. So I would assume that, something's going to pop up. I'm not really a believer that this is going to be a full out Spanish flu kind of thing where 50 million people die. A couple million could definitely happen if we don't, keep it together.
So, do you know that during the Spanish flu, the first wave happened towards the end of
so the
World War I?
Yeah, so this summer is important, that a lot of these, music festivals and things like that might see things calm down over the spring and when the temperature gets warmer, and apparently the virus has, some pushback against UV and whatnot, people might think it's all good, but then all our interaction at the end of the summer could lead to a bad fall. Yeah, that's totally possible, but
Yeah, that's what I'm, yeah. Because that's how it happened back then.
Yeah, exactly.
Okay.
We have more means nowadays too. Yeah, so,
True.
I was looking for the 87, so the thesis here was Bitcoin isn't a store of value in a crisis. And like gold, when everything first pops off, really nothing goes up. And that, from my perspective, I think based on balance sheets and things like that, compared to before the virus, things seemed generally healthy. Obviously, a lot of debt out there, but it's not like everything was already smashing its way down and then a virus came out. So I think there's room for recovery. And then the next part we're going to get into is having a look at the correlation here between sunspot maximum and minimum. So the sunspot minimum is where we have lots of cosmic rays coming in, and then when there's sunspots, the extra sunspot
flares.
Yeah, and everything. Solar energy blocks a lot of the cosmic rays, and as we see, a lot of the tops of the sunspot cycles are when recessions come in, and then often on the downside is where it can hit even harder than just a recession, depression, or along that lines. So what we've seen here was this solar cycle. It's about every 11 years. And then we see a greater one here that's every 100 or so years. And back to Carey's chart here. So everyone can go check out the 17.6 year stock market cycle, because that's his work there. So he was basically saying that, come 2023, that there would be a big pullback within this market. And then at 2035 would kind of be the end of things. Now, if we were to go back here on the grand cycle, 2035 is kind of in the new Dalton minimum. And what each of these kind of waves up and down represents is these ones, like every 10 years. So even though there's a gyration to high and low and high and low, it's still these grand cycles to high and grand cycles to low. So right now, we are in a solar minimum. We'll go over here to space weather and people can see here. So here was the last solar maximum where
next time, can you put an RSI up for me on your solar charts?
Yeah, right. So we're seeing, back in 2013, 14, we were at a maximum where we had lots of sunspots, and then back here, 2008, 2009, the last crisis was a solar minimum, and that's also what we're seeing here now with lots of spotless days. So
yeah,
that's showing that space weather there.
Even the sun is weak.
Yeah, so space weather here is showing like an 08, 09 max solar minimum, and same as now, and then 2014 the max, and then so that's like this extended over here, right? So that's the 08, 09 last time, and then the 14, and then we're down here again. So what that is doing is playing out this last kind of bump in here, right in here. So after this cycle, we should be seeing the new Dalton minimum, which is why we're sort of, now this is back here in the
early
panic.
1900.
Yeah. And then a lot of these ones, these highs and lows correlate with other empires that have had their great falls as well too. So I don't want to say this is the end of the American empire, but this is definitely a massive shift happening right now. And I think that these grand cycles are showing that. And I think that we have even seen that these cycles correlate very well to pandemics. Most of the time they pop out near the top of the solar cycle or the bottom of the solar cycle. And that's exactly what we've seen here with recessions too, right? Hits at the top or hard again at the bottom. It's very rare that you have one kind of mid-course. and it's roughly the same kind of vibe on the flu pandemics as well. So there's this big correlation between what's out there and what's down here, as above, so below. So that was kind of this this general thesis that things are going to get bad, nothing's going to be a hedge, and then chances are this first event is going to be more 1987 like, and that we'll see a stronger bounce because things were pretty good before the event, and that the weakness will then roll off afterwards, which is me then saying
all right, so I mean, it didn't all happen in one day.
Yeah, exactly.
The crash in 87 happened in a day, pretty much. But major part of it was 30% in a day.
Totally, yes, but it's more about when you're looking at patterns over the course of time. Just the
we just got, instead of a day, it took 3 weeks.
Yeah, right, exactly.
Okay.
So, and then keeping on that whole as above, so below, here's an interesting chart. This is the green line is the trading the S&P 500 from 3 days after the full moon for 2 weeks. And then the red line is trading the S&P, like buying and holding from 3 days after the new moon for 2 weeks. So there's a large disparity in profits from holding for full to new moon versus holding new moon to full moon.
Interesting.
So from the sunspots to this and other things that I won't get into, that's sort of the thesis or the basis of a book I'm trying to write this year, which is that
is that going to be the title? What is above is below?
Yeah, it's an astronomical, something along the lines of I was going to use like astrology, but I think astrology can push people away. So I'm just going to go with astronomical and just show that, yes, there are correlations between the two. And I think that a lot of people try and use astrology for finance, but don't really go out of their way to say, hey, here's some concrete examples where we can show there's unbelievable correlation. So, let's take this a little more seriously. And I think the fact that, I can, when everything seems fine and I say, okay, well, we could have, saying a 1987 style event is like saying a very hard, violent crash, is going to happen. And when was this tweet? Beginning of January. Everything seemed fine then. And then it all happened. And could I have predicted a flu? No, but the charts and the cycles said something else. One reason why that became more of an option to me for this year than next year was watching natural gas break down from this pattern late last year. So I think natural gas is another way that people might be able to gauge when a rebound on this is all going to happen structurally, because this has all been holding too well. If it accelerates and goes under the line, probably will be a sharp correction, because we're coming from this pipeline explosion at or probably 50 it was, and we're already down to 150. So
all right, so we're having a little bounce here, but you don't think it's it? We get a little bounce and then one more flush?
It kind of seems like it, because we're also coming into we're exiting the winter. So natural gas USD is North America, really looking at North America. So there's going to be less demand over the spring and summer as well too. So even though there could be a technical bounce to kind of fill how violently this came in, it could definitely make sense that we could see more push down throughout the summer, and then a bounce coming into the fall would make more sense to me.
Okay.
The pain and how bad can it get? We'll see that on the great maximums, it very rarely holds above and stays above. And the same goes for the downside too. And we see there's only ever a couple, other than the Great Recession, since the VIX became an instrument in 1990. There's only been that one time where it ever spent even 2 months over 35. So again, like, this is an interesting situation, and that it's a virus, but we're also coming into the summer season, which should help a kind of travel bans and things like that can help a bit. Again, it's slowing it. It's not going to stop it, but if it can slow things so that the hospitals aren't overwhelmed, and then that makes people feel like it's not just ravaging society, and then markets will like things a little better, right? So it's all about slow things right now, and looking at things that have, I would say, things that have happened in the past that are markers to show how bad have things got on a historical basis. How long does it usually last for? And then when do I start looking? So I think that it's hitting what is historically pretty bad times, and it doesn't usually hold those bad times for all that long. So once enough panic is hit, and I think for stock people, when they wake up feeling how North American Bitcoin people are gonna wake up in an hour or two and look at price and feel pretty horrible. I think when stock market people have that moment, the turnaround will be probably pretty swift. So two things that we're going to look at for stock charts here is, one is a more short term. I had taken this fractal in here and this in here, and sort of pasted them in with the bars program. I think it was around here when I did it, and it has just kept cratering down this. It's going to open lower this morning too.
So you think we're within days of turn for a pretty strong bear market rally?
Yeah, I mean, we're going to have to see. The reason where, again, it's a virus, and people are definitely overreacting on the financial selling side of things. But so the pattern here that we're looking at is this sharp sell-off, sharp sell-off, sharp sell-off. And then we kind of get this M, and then just a channel up, and then this M, and it does break lower, but the break lower is a very obvious V, and then after the V, we still have this kind of squiggly channel, and then it tightens at the top, right? So with the election out here in November, there's definitely an opportunity where we could see, this sell-off, the M pattern, that could either continue to sell off into May or, base a bit. Both of these patterns, plus some of the GAN astrology type stuff I do, and some of the GAN astrology stuff a couple other people I know do, all suggest that there's a possibility that that a low in May could have a nice bounce.
That'll be interesting, because normally it's sell in May and go away, but if we're at 2,000 in the S&Ps,
yeah, exactly, right?
You'll want to play in May.
True, and also from the virus perspective,
I was just going to say we should be peaking then.
Yeah, so we would really have understood in April, by the end of April, what the hell is going on in North America, how bad things need to get or don't need to get anymore. And then there's been a lot of what's the word I'm looking for here, speculation that that UV light, sunlight, etc., plays a big factor.
We're hoping for that.
We don't know that, right? Yeah. Exactly. So if that's the case, we would also see, how North America has dealt with it from the first wave perspective, and then we will also be seeing if the natural forces are taking effect. And if both of those things are working out okay, we would probably know in May, because the temperatures would be getting warmer and the impact on the hospitals will be far more known. I think we're going to know a lot 2 weeks from now, really. And then that will let us know if that really happens. So I think that there's some pattern overlay here to May. I think that there's some sort of GAN astrology overlay in May. And then I think there is sort of natural forces overlay in May as well, too. So I think that that's for the people that look at time, I think that's important. History has shown, other than right here, that once you get
I forget that.
35, 45, 50% bounces, hits, that there's strong bounces. Even within these pushes down where it does go to like 50, it often kind of goes like 25 bounce, 35 bounce, 45 bounce, finds the floor at 45 to 55, and and then resumes up, right? And even here where it did crater all to hell, it still went to 50% and had a strong bounce here. It didn't just go straight down, right? There was this, okay, are things going to get better? Because this is probably, retraces about half the move.
Well, 50% is 1,700.
Yeah.
On the S&Ps, which is a megaphone line down there, 1,800. I'm sure you know that line.
So with that in mind, there would be a zillion different things you'd want to buy. Something I find very interesting that people might want to look at, as long as Oprah stays involved. People can go look this up. This was a study I did a while ago. Basically, here's Weight Watchers before they became WW. Weight Watchers was doing great. Everything's good. Stock, totally crashes. Right in here, Oprah buys a whole bunch. Oprah comes on board. Stock, goes crazy. Oprah sells here. They rename to Weight Watchers.
Get an Oprah's hedge fund.
Yeah, right.
Do you know how to get in it?
Well, I wish. And then after the name change and after selling and making, I think she made 110. Yeah.
How about the weed stocks? Last time you were on, Matt.
Yeah. Well, that's all
ideas. That went to hell too.
Yeah, sure. I'll just finish that idea and I'll mention it. Okay, just remind me of it. Okay. And then as she leaves, it totally tanks. As the price is tanking, they're like, we need Oprah again. So that's February 2019. And let's take a look at this blue line. There's February 2019. Bang, Oprah comes back on board. So there's this head and shoulders kind of wonky pattern. If everything goes to shit and Weight Watchers fills this gap, that's going to be an enormous buy because Oprah's going to keep staying on board, and she clearly likes making a lot of money off of this stock. Gold and gold, platinum, silver. Palladium has been doing its thing. It's on its own planet. The gold ratios for platinum and then silver are just terrible, ratio. Right? So it's there's really going to be. I don't think there's going to be any relief till the market has kind of had a bit of a bottom, kind of like the 08, 09, or 07, 08, 09 era when everything.
So you think we need a recovering stock market for the gold silver ratio to turn from where it
because
is
I don't see why. Right. I don't see back to this whole thesis of if something goes down, Bitcoin is going to go down, and gold's going to go down like it was before, and we're going to get hit hard like in '87 at least, and then our big cycles show us that there's also a lot of crap in the air too. So why, for people to go into silver or platinum, there's going to have to be a reason for them to need to go into gold. So unless, and then again, this is very virus based, right? This isn't that balance sheets were ruined and that every company was seeing less and less customers. There was still growth happening before. So we should see, I don't necessarily say, we're going to have an overnight return to growth to the point where we're reaching new all-time highs, but the fundamentals weren't horrible. So silver and there would have to be another fundamental need to go another black swan. I don't think we can handle two right now for that to happen.
Well, didn't we with oil and all the debt from shale companies?
Yeah, well, and that's
why the bankers were there. You think the bankers were at the White House to talk about helping us, or
probably
they need some help to cover some of this bad debt?
And that's what it is. It's debt, right? So that's still good money will find a way to cover bad. But so if gold goes, that's why people. That's back to the beginning again. Is that when things first start to pop off, that gold and everything, tends to get hit too, because people are like, oh my God, I lost 50% of my money and these other things are underwater. I've got to sell my positive gold position to fund these losses. That's just kind of the way it happens. There's an interesting is gold USD versus gold and the Canadian dollar, or just emerging markets in general, right? Or actually, Canada isn't emerging, but anything that's not U.S. dollar has pretty much seen new highs in gold. And there's a pretty there's a small case here to say that's kind of a cup and handle-ish kind of thing. And we've seen that there's a bit of a triangle at the top here. so at the breakdown of this triangle, there's kind of a doji here and a doji there, and that's with the extension of this line and the extension of this line. The top of the, so there's a top, there's a big sell-off, and then there's a bounce. So this top area here is the same as here, which seen a lot of resistance in Canadian dollars. So if on a monthly basis, things, we're trying to sell good to cover bad right now. And if in a couple months we find out that the virus didn't take too strong a hold in North America, that could be kind of like one of these kind of scenarios in here where it could hit resistance and maybe, that becomes the dip of the handle. Possible if it's going to continue. If you're a gold bull, that might be a thing to look at, because
how about if you're a gold bear?
If you're a gold bear, then you're saying, well, this is kind of like what we call like an OTE retracement, and then it's going to go back down. But the strong inverse head and shoulders here was a nice play into resistance for sure.
I think it achieved that objective. Off that
and you're asking about cannabis stocks, and so a lot of that we were looking at was fundamentals, and that Canada was. Let me get my dates right here. October 17th of 2019, it became legal to sell anything other than flowered products in Canada. So like edibles and CBD oil and other products were eligible to come on the market. It was a 60-day wait period to register. So that takes us to December of 2019. So the theory there was that, everything had been going down, had been bad government regulations. There was a lottery process in Ontario. So where there was once 1,000 stores in the illegal market was 24 stores in the legal market. The illegal dried product versus the legal is twice the price. So illegal is half the price in Canada. So it's roughly $10 a gram legal and roughly $5 a gram illegal. But it's interesting because in the news or in the reports, they say the cost of cannabis in Canada is $7.50. So it's not actually $7.50. It's either 10 if you go buy it from the store or 5 if you buy it on the street, which is a huge disparity, right? So I think that there's still a large push to stay in the black market. And because of that, and because of really bad government regulations, and because of really bad rollout in places like Ontario, New Brunswick, certain provinces have actually run a loss. And so December comes in for your edibles to be, sold because of the 60-day waiting period. But, now people need to manufacture them and yada, yada, yada. So we were thinking that sometime now sometime in Q1 2020 would be when enough of these markets products have started to hit the market, and we can maybe see some sideways and bounce on these products, however, or markets because of the products. But the lottery process and everything in Canada has not actually gotten better. The government continues to just be absolutely horrible. If I was a large cannabis investor, I would group other people together and make some sort of lawsuit against the Canadian government, because it's been absolutely ridiculous. Their regulations have definitely hurt companies, and it's horrible.
You want to show a couple of charts of the issues that you talked about and see what they look like?
So, canopy growth is sort of like the bellwether here, and we've seen an utter breakdown with the market, which could send it back down to $10. We've seen Aurora, which is unfortunate. Now, Weed, which I just did, Canopy Growth, is still a fairly well-run company. Aurora has been having a real hard time. A lot of things have gone wrong, and they, like other big companies, decided to just go crazy on the mergers and acquisitions and bought and bought property and thought that cannabis was going to be the next new thing. So as things pulled back, and as they've had CEO issues and whatnot, they just continue to get killed. So we'll see this pattern here, and then break.
So a lot of dilution on these, Matt, where they're using
I think that's going to start coming in more now. So here on Canopy, kind of like this top, and then it kind of bases, right? Which is same thing Aurora did here, kind of top, There's a little bit of a base under support and fell off. So weed could do that too.
Yeah.
Tilray, I mean, it's under the IPO price now. Holy smokes, so that's rough. $6 down from I believe IPO was 17. So I think that's where this bounce was creating here. It was a technical level just under, sort of washing out ICO or IPO holders.
Wow,
And then
200 to $6.
yeah, exactly right.
Wow.
Uh, this company is fairly local to where I live. They have a couple physical products that they sell, like they have a machine that rolls dried product. They're also the
I
only.
like the look of this.
Yeah, they're the only. They're the only They're the only company that sells to the province of British Columbia, and for live items. So. Like younglings, clones, whatever people want to call them. So now that
so it's 6 cents right now.
Yeah,
7 cents.
Eight, okay. I guess, and it keeps spiking down.
That's a penny stock.
Yeah, for sure. So this company, what they do is that they were a supplier of the clones, so that people that have a medical license could grow in their own home or their own property before, when it was still illegal. And then they still have the rights to sell to the government of British Columbia. And as of a couple months ago, and we still haven't come into our first outdoor growing season, that this company is still the only supplier to the government. And now, because of that it's legal, the government is the one selling the cannabis and the edibles and the clones. So instead of just selling to medicinal customers, this company will then be open to selling up to the general public. And they've also invented and developed their own machine that auto rolls, like cannabis cigarettes. So I know that the CEO of the company bought quite a lot in here, I think, when they were, you can see there's a lot of green dots under these candles because there was actual real buying happening. That got washed out, and then it's this kind of breakout here level has provided support lately. So I think this is an interesting company for people to check out, just because they do have government contracts, and it's been quite a number of years. I think that the biggest push for anyone that's looking to go back into cannabis will be wanting to look at companies that operate in Canada and in the US, because the Canadian market is getting, because things have been so bad, now there's kind of like an oversupply, and that's also pushing down a lot of heritage. All of the companies are getting pushed down. Heritage is already back to.
Well, we're at our second limit in the S&Ps right now, Matt.
Jesus. All right. So
anyway, listen. I have something I want to leave with you. It's a little poem I wrote about Corona.
Okay, let's do it. No.
You haven't seen it on Twitter?
I haven't.
Corona, fear that I'll own ya. Born in a lab in China, spreading so I'll find ya. No one is safe, not even a king, and I'll be the excuse for everything.
Oh, my Corona.
Oh yeah, I forgot about that song. Anyway, are you in the States, or you're in Canada, or where?
Canada, yeah, West Coast, kind of halfway between Vancouver and Calgary in the Okanagan.
Okay, well, Matt, what a great presentation, man. I stay healthy, and keep in touch with me, and I'll get back to you later today on Twitter, and we'll set up a date a few months down the line, see how things are playing out. And I really appreciate all your hard work and preparation for every time you come in here. Thank you, my trading warrior brother.
Awesome. Thanks for having me.
All right. And the best place for people to follow you, Matt, is Twitter?
Yeah, for sure. It's definitely Twitter. Okay.
So you can follow Matt at DJ Thistle, THI01. And that's where you'll find his work on Twitter. Thank you, buddy.
Thank you. Have a great day. Bye-bye.
All right. Adios. Oh, guys, remember, don't just count your pips, count your blessings. We'll see everyone tomorrow.